What's up, everyone? I'm back again with a. This time I'm gonna do a stock. The stock I'm gonna do is Pfizer, ticker symbol PFE. Now, this stock is something I looked at during COVID, and I sold it after COVID shots came out, and because I thought they didn't have much to offer afterwards, because that was a big growth for them. But before I go into the stock and explain more about it, I'm not a stock analyst. I'm not a financial or financial advisor. I'm just some guy on YouTube. And before you invest your money, please go in and do your own research and talk to a financial advisor. All right, let's get into this. So I'm gonna change it up. I went and started using Chat GTP, or whatever, or the AI function to give me more detail. So the co-pilot actually told me, hey, the latest update on Pfizer is $30.77, and it increased 3.39%, and it saw a low of $30.01. Now, Pfizer market capitalization stand at approximately 174.36 billion. Now, I'm gonna go ahead and look at the weekly. It's been doing pretty good recently, and that's why I brought it back up. Monthly, it's been doing pretty good. Yearly, it has dropped, and 5 years it has dropped. So the weekly, I'm looking at this, and it looks like it might have started to come back up and recover. Now, what does the analyst say about it? Stock over the next 12 months, the average target price is around $34.50 in the next 12 months. Now, this is the co-pilot from Bing, and I'm just trying to do a market research on a stock. This suggests potential increase 13% in the next 12 months. That's pretty good return on your money, 13%. So, thank you, Chat GPT, on this. And let's look at the stock actually itself. So the stock itself, let's look at the investors. Who's investing in it? BlackRock has decreased their sales, which, all right, they decreased it. Why did they decrease? Vanguard has increased it. State Street has increased it. Charles Schwab has increased. So, okay. The top shareholders are taking more of a interest in it. Now, the decrease of a 25% from Wellington Management Company, I don't know who they are. I kind of only pay attention to the top few and the major banking companies because they have more money and they kind of can fluctuate the market however they feel like sometimes by just selling all of it. If tomorrow BlackRock sells all their share, this company would drop dramatically. So that's why I kind of pay attention to it. Now, Bank of America has increased their shareholding, which is a good thing. Looking at the earnings in the last few months, they've been hitting it pretty steadily. They're doing pretty good. And analysts does have a strong buy for this. Now, let's look at the sentimental. Let's look at this. They're thinking it's bullish. And let's look at extra shareholder, new shareholder, top seller, Wellington, Captain, Capital World Investor. I really don't know these companies too well. I should start looking at them, see what they control and what they do, but it's not my interest. Let's see how much money they make. Net profit is 3.71%. I have a standard that if they're not making a net profit above 10% or 15%, I won't buy them because that's too close of a net profit margin for me to lose money or the company to lose money the next year. I kind of want them to stay in the 13 or percentile. And 2022 and 2021, we know due to COVID, they had a good market of 31% and 27%. So that being said, they do have a good evaluation from the analysts saying that it should be $34, which would give it a market research of a, what's it called, of a really good high standing. Now, do they offer a dividend? I believe Pfizer does offer a dividend. And let's look at the dividend history. They offer a dividend yield of 6.02%, a very high dividend yield. So, dividend payout ratio, that's not very good. But the track record is 5.46%. And they don't really have anything else they're doing besides making their shots and pharmaceutical. So they're already in the top of the industry. So that makes sense why they have a high dividend yield. And they do look like they've been paying out consistently. So with this 6.13% dividend yield plus the 13%, you're looking at a 20 to 22% increase for this stock if they pay out their dividend yield. Is it? Now, the market beat says is a hold. It has an upward trend of 12%, and short interest is healthy, and dividend is strong. So, should I add this to my dividend portfolio? Let me see. They have a high dividend, and they have a high prospect of being a increase of a 12%. I am not going to buy it at this time because they're finance. Now, I know it's petty for me, but I'm buying a company as an investor, and this profit margin isn't good enough. But just in case, I'm going to go to the Pfizer investor portfolio and take a look. They're one of the largest companies that do pharmaceutical. They have been around for 175 years. So they will not be going anywhere. And they will be doing pretty good, I think. Now, update statement, partnership, media contact, media assessment, press release, stories. I didn't know they had a podcast. So they do have a podcast, which that's interesting. Now, I'm going to the investor part so I can see what's going on. Because why should I invest in them? So company CPA. The direct purchase a dividend reinvestment plan. So, okay, they do have a dividend reinvestment plan, which is pretty good. That might be why their profit margin isn't as good. Dividends are usually paid out March, June, September, December. This is pretty important fact because if you're looking for a dividend payment and you're trying to live off of it, you need to know what month you're getting paid out. So now we know that it pays out in March, June, September, and December. And let's see, shareholder. Let's look at the quarterly report. Look at the presentation. So this is from May 1st, 2024. 11K. So patient impact 119 million. So they do oncology, pipeline innovation, blah, 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 blah. Let's see. So they have a revenue decrease of 19%. They have adjusted cost by 34% and adjusted expense. So that kind of makes sense because of the COVID situation. They had to increase everything. And adjusted cost sale and everything. It looks like they factor everything in, but you see that they're at a loss this quarter, or they have to adjust everything. So last quarter they kind of lost money, but maintenance and grow over our dividend, so they return most of it to the dividend and they pay their debts. So share repurchase, none planned in 2024. So they do not plan on repurchasing any of their shares. Now they did put 2.5 billion into their reinvesting in their business, which is good for their R&D sector. And it's good that they paid off their debt. And they do expect to pay another 1 billion off. So you know what? I can't really hate on that. So they have a plan to pay off their debts, and they have a return to shareholders. So they do plan on giving it back to the dividend because they can't really do much else besides use the money to reinvest in their company and pay off their debts. You know what? It kind of makes sense why their their earning is not as much because they paid it out in dividend with the increase of a 6%. Now, is it gonna be 6% all year? So far, it has been holding up for 4 quarters. So I want to see why invest in them. Overview. So Goldman Sachs fourth animal. Okay, Goldman Sachs is a pretty good investment company. So yeah, I think they're a decent company to invest in. But I just don't like this 3.71% net profit. It's too close of them going into debt. And if they go in debt, they can cut off their dividends. And that's something, if you are a dividend investor, you don't want happening, because if they do cut it off, you are out of money. And then 14 hours ago, Pfizer shut down the operation in 2 North Carolina facility, losing 200 jobs. So with this shutting down, operation costs did go down. It's good for, as an investor, to see that they're doing things to try to cut costs. But it's bad for the stock because you're losing the face of the company because you had to downsize. And that's what people's going to think of. Now, Pfizer gained a 7.3% in 2024 with a weight loss drug pipeline. So you know what? They did have a weight loss drug now. And Pfizer invested $743 million to expand facility in Singapore. So it looks like they went for cheaper labor and shut down the new North Carolina facility. So looking at this, they have a restructure going on, in my opinion, because with a shutdown of the North Carolina and the expansion of this with their new drug coming out, this is just this last week. So I'm going to pay attention to it. I don't think it's really going to hit its 34, but it has been doing pretty good. Now, I am in the aftermarket hours to pay attention because I don't feel like trying to figure this out and watching the numbers change all the time. I kind of like researching stocks on Fridays and Saturdays. It's just the day where people sell all their stock to try to get whatever money they can. And before I leave, I want to look at the projection to see what numbers they're going to be stuck at. So 30, they have a large number here. 32. All right, that's not bad. Put option, they have it at 35. 29's the holding. 30 is a good holding for it. Okay, so they have a lot of interest in this stock. And looking at those numbers and the indication, will it get back to $58? I don't think so. I think it does have a chance to be back in 34 range, but that's because it depends on what drugs it comes out with, and that can help the population. But with Monday coming around, I think this Pfizer shutdown of the operation in North Carolina gonna scare some day traders, and they might leave the stock. So I'm gonna pay attention, but they do have a very good dividend of almost 7%. So whatever the earning is, it might be going into the dividends to help pay back. And they had a overestimation from 6%, because they jumped from 4% dividend to 6% in a year, and that could have been the factor. But the earning preview for Pfizer for Q2 earning expect to decline, so that's another issue. And remember, it's always good to pay attention to the news of a company. It's just anything that happens in the company, good news or bad news, can affect it. But Vanguard Group did increase their holding, so those are some good news. I'm gonna wait. If it does go down to $28, I will buy some. If it goes down to 29, I'll pay attention to it more. And if it goes to 31, 32, I might pick up some, because they have a very good strong dividend yield of almost 7%, which is hold on, let me look at this. They pay 0.42 cents. They have a dividend yield of 5.46%. So you only need an increase of the stock of a 4%, 5% a year, and you can get a 10% return. And that's not very hard looking at this stock, but expect for the dividend yield for September 3rd to be 6%. So year over year, if you go up 6% on this stock from a dividend yield, that's not bad. And with the analysts saying it's supposed to be $34, $32, wherever the analyst says about it, $32, you know what? That does go up a bit, and that does help me think about buying it. But as of right now, it's not a buy for me. So as an investor, I'm going to stay away from this until I see them make a little bit more money. So even though all the other numbers look good with the high dividend yield, with all the news coming out, I really don't think I'm going to buy this company, just because they're restructuring and they're moving around their money to try to find out what's the optimal. And it's not a good time to buy whenever a company's trying to figure out how to maximize everything, as there looks like it's restructuring right now. So please like and subscribe, and stay tuned for another video.